Aloha, everyone. I hope you are enjoying your long Easter weekend. Starting it off with the NASDAQ, we can see that we're still holding the 50-day moving average in an overall uptrend, but what we don't see is any volume on the upside anytime we rally. So as long as we continue to see low volume rallies and heavier volume sell-offs, even though we're under a neutral condition, I am worried about the overall structure of the Nasdaq for about the past couple of weeks. I don't like these heavier volume sell-offs and lower volume rallies. TSV and MACD are in downtrends. Shorter term, they do have lower or higher lows, I guess you could say, but there isn't a really higher high series yet. So overall, the index doesn't look that great, but it doesn't look that bad, and that's the best way to summarize how the Nasdaq looks right now. The Russell 2000, on the other hand, doesn't look great, but it still looks good and it's solid. And if we have to go based on which index we want to look the best right now, it's definitely going to be the smaller cap indexes. So we're very happy with the way the Russell 2000 looks. We had a whole bunch of new long signals on Wednesday. I was a little nervous about all those long signals following that big crack on the previous Wednesday because normally, I don't know, man. It's normally when there's a big crack in the market and then you get like a whole bunch of long signals in one day. Historically, for me, that's meant that, especially if we fail on all those signals, that we're going to have a pretty gnarly sell off. So we'll see if these signals fail or not. But on Friday, a lot of them didn't do immediately what they needed to do. But the biggest disturbance in the force on Thursday was the Dow Jones Transportation Average. This thing cracked its 200-day moving average on a closing basis on above average volume. 3 days in a row, it's been selling off on heavier volume. And if you look at the MACD and TSV, it is confirming the break in price. If you look at stochastics, yikes. The only good news is it's racing to oversold. So what you could see here is if we do reverse immediately Monday back above the 200-day moving average and even stronger volume, that's an excellent signal that the market will want to rally. But overall, when I look at the RSI, stochastics, MACD, and TSV, I don't want to fight that trend. And if the Dow Jones Industrial Average is making highs, but the Dow Jones Transportation Average is making lows, that's a bad sign. Any kind of price divergence is not good. And I speak of that because back in February, when the Dow Jones Industrial Average was hitting new highs, it was not being confirmed by the Dow Jones Transportation Average. And as you can see here, while the Dow Jones Industrial Average holds up, the DJT is breaking down. That's Dow Theory 101 divergence, not good. You always want to see these indexes confirm each other. So our rally could be in trouble. Now that being said, I do have one new long signal. Had a few others potentially. EPAM. It's a volatile market. We got a long signal in EPAM back here. Looked pretty good. Didn't look great. A little extended from the 50-day moving average. It didn't work right away. It consoled a little bit. Now we're getting another pocket pivot point signal, this time on extremely strong volume, and it came on a Thursday, so that's always good. Anytime I see huge volume on Tuesday, Wednesday, Thursday, I'm always stoked because then that's clearly accumulation to me because it's not normally big news story days or big economic data or options expiration kind of days. But EPAM is giving another pocket pivot point signal. Excellent risk reward ratio. 0.52% update if you want to use the low a day as your first cut loss level. I recommend in this market putting half right around the 60.36 level. You could also use 60.51, but I would do half around those two levels and then the last of it at 59.51 before you've proven you're wrong. And even if it goes all the way down there to prove that you're wrong, you can see that you're only risking a little over 3%. So it's not a big deal if EPAM fails here. I would rather take this long signal, be proven incorrect than not, because remember, overall, all the indexes outside of the Dow Jones Transportation Average are still trending higher, even though it's ugly as shit, especially like the NYSE and the S&P 500. But as long as that overall we're not in a downtrend, which we're not in one yet, but we're trying here on the S&P 500 to roll over, I would rather take a signal, be proven wrong, like those recent longs, like NSP. It's close there. Remember, the low a day is my final cut loss level, but it didn't work right away. Plus didn't work right away. LEA ran away from me. FLT actually did work from the entry, but our one sell was CCO. CCO, of course, is once again these speculative stocks that I go long. They just don't work for me anymore. And it's crazy because this is a beautiful chart pattern. The stock is as nothing but accumulation in it the entire way since October. Only distribution day is back here at the beginning of January. Every other day is just beautiful. But yet, as soon as it gives a good pocket pivot point actionable signal that used to be a signal that I guarantee that this stock is definitely going to work. Before 2008, I get a signal like this. This thing's going higher, 100% sure. Nah, man, they just don't seem to be working. So CCO, it hit half of my sell stop, which was below 998. But now what I'm going to do is, I'm going to fart around a little bit just because, I just had DGLY screw with me. So DGLY on the signal date, I put the low a day at 1234. After day one, I moved it up to 1239 below the low a day signal. And of course, on this day, it wouldn't matter which one I had. They both cut me, out. But on Thursday, big rally day, and after hours, I saw that it got up to like right around 14 something. So damn it with these signals. They're just screwing with me hardcore. So CCO, going to put half of the remaining position, sell stop below 980. And then the other half of the remaining position, sell stop below 967. But it's unfortunate that these beauties just don't work like they used to. So there's also another beauty tonight, but I'm going to go ahead and pass on it. CYNI breaking out. Why am I passing on it? Well, because, with the rate things are going, I want everything to be perfect with these. 200-day moving average, you can see, is still downtrending. It is not uptrending. CYNI's current base is pretty short if we look at this little cut pattern. If you're in an overall part of this ascending base pattern, yeah, it's not that short, but still, pretty short cut pattern considering that it's, not a stock like near its all-time highs. There's still plenty of overhead resistance in 2013 and 14, though it's not that important. But CYNE, pocket pivot point, signal, heavy volume, volume surge. If you want to play it, go for it. I'm just going to go and pass on it, but might as well put it here because whenever I pass on something, it works. A la PAR. Look at PAR. Remember, PAR was along back here. Passed on it 29% later. I think CRMD is still holding up too. So, take that into consideration. But PAR's base was longer. CRMD's base was longer. CYNI, it's still pretty good. But, if price would have surged and closed near the high of the day and BOP would have surged even bigger to a higher green BOP level, yeah, I'd probably go long. But as of now, no way. And then also DXCM. Should have added this stock back here. Intraday, it hit my sell stops were just right below this low. Didn't go much lower, so I feel like an idiot. It was like 58.11 or something like that. Ended up closing even at 58.37 above it. This is the day I should have added it back, but the lower volume below 50-day moving average I didn't. Then I thought, well, now it's up too much to add back to it. And then I got a pocket pivot point signal, and I was like, yeah, shit, should add now. Well, okay, enough's enough. So now I am going to add DXCM back. I've now had 3 chances. This is the 4th one. Might as well get long, be proven wrong, risk losing 3% if I am wrong. But I'd rather get back in and be proven wrong. But this market is looking sketchy. Futures were down big after the jobs report. So if our sell stops are hit on all those new long positions, along with that Dow Jones Transportation Average, that's my big tell that we're going to start selling off here, and that's why it's been pretty hard to make money in the past month compared to the early portion of 2015. All right, everyone, I'll see you in the chat room on Monday.